Well, the market continues to come lower. We saw it lose 10 basis points today, closing at 25,755, just over 25,755 points. And it was a mixed bag of gainers and losers. We saw, for instance, that Afribank was up 4.9%, and that's on the back of the impressive first quarter results which we saw the bank release recently. We also saw Oceanic Bank come up 4.7%, and that stock, that company released first quarter results as well today, and that was extremely positive. We saw PAT coming out at 2.5 billion. So one of the rescued banks, again, releasing positive numbers. We also saw Continental Reinsurance, that was up 3.9%, and that stock has rallied a bit since the company released its first quarter results. And on the losers column, we saw May and Baker continue to shed weight. It lost 5% on the back of poor results which were released last week. We also saw Cadbury come down, and I think that was on the back of profit taking, as that counter has rallied significantly over the last week. And then, of course, Union Bank also shed 5%. Interestingly, they also, that's another rescued bank that released positive numbers recently, but I think it's also on the back of profit taking, as we saw that share price rally last week. So to get some perspective on the market, we're joined in the studio today by Razak Abiola, who is an analyst from Meristem Securities, to give us his views on the markets. Thanks, Razak, for coming on the program.
Thank you very much.
I want to get your view. This sideways trading pattern that everyone has been talking about, it seems to be playing out clearly. Last week the market was up, to this week it's down. What's your view? And I would really like to know what do you see as the catalyst that might drive this market up?
Thank you very much. You see, one should expect that ordinarily investors currently should be cautious. And in fact, I would say that caution is the right word currently as we speak. Because given the fact that the equities market rallied so much in the first quarter of the year, and ordinarily people are beginning to worry of the fact that we might not experience the same thing in the second half of the year, particularly as we go into the second half of 2010. But notwithstanding, there's still a number of positive fundamental upside for the equities market, particularly that the interest rate environment is still currently low, and the bond yield is still low as well. The real estate market is down, and we continue to expect that people will continue to look into the equities market, and that, I think, is a positive for the equities market. If we look at the global equities too, I think they are coming up gradually. We see equities gaining this week again in the Asia, even the euro that is calling to troubled, and I think the same thing will continue to happen in Nigeria. However, given the fact that the downside is limited, we should not expect much fundamental upside as we see in Q1, particularly that most of the stocks on the exchange are currently trading near their fair value.
Okay. Now, I mean, in the light of that, which non-bank companies, because we've talked about a lot about the banks this week, which non-bank stocks are you looking at and look attractive to you at the current levels?
So currently as we speak, the like of Skybank, I don't think should be trading at a PBV of less than 1. Currently as we speak, Skybank is trading at a PBV of around 0.8. Likewise, the like of Access Bank trading at around PBV of 0.9, and I think that is currently low. At least if we benchmark it against their peers in other emerging markets and frontier markets. And I think the like of Access Bank and Skybank, like I said, Skybank, Access Bank, Fidelity, we continue to see positive fundamental upside in them, particularly that their Q1 result actually shows an improvement relative to their 2009 results.
Right. Sorry, I have to interrupt there. I was actually hoping you could give us some views on the non-bank stocks, but in any case, let's come to USC Properties lastly as we round up now. Obviously, the company is raising 30 billion through a bonds issue. The CEO was on the show, one of our shows earlier today. What's your view on that bond issue, and what impact do you see that having on the company's earnings going forward?
I think the company's decision is laudable, particularly that if you look at the nature of their operation, most of the projects of USC Property are medium to long term, and I think there is an asset liability mismatch which they need to correct. If you see USC Prop currently as we speak, using short-term fund to finance capital projects with a gestation period of around 2 to 3 years. And I think that is a mismatch which the company is trying to correct now. The timing of that bond is what I may be skeptical about, but I think is a good option that investors ordinarily would continue to at least appreciate in the near term. Particularly that investors are beginning to look into the fixed income market again. But notwithstanding, I think USC Prop might have to come up with, they might have to accept something reasonable in terms of yield spread.
Okay, thanks a lot for your insights on that. So obviously you like the stock. That was
not really that I like the stock, but I think it's fundamentally justified.
Okay, great.